welcome back to another video, and in today's video I want to talk about what my experience has been like investing on the Jamaica Stock Exchange. Now I know I don't often post on YouTube, but I'm trying to change that. So if you like the content, definitely leave a like, share it out to a family or a friend, somebody that might be interested in learning about investing. And remember as well, if you are not subscribed, please subscribe to the channel. It goes a long way in helping and motivating me to put out more amazing content just like this. Now, investing, especially amongst young persons in Jamaica, is not very popular, to be honest. And growing up, I didn't really learn a lot about investing. I didn't really learn a lot about money management and stuff like that. These are things that you learn typically as you become an adult and you get involved in the working world and you start to have bills, expenses, and different stuff that you have to pay for. This is typically how you start to learn about a lot of financial concepts. And it shouldn't be like this, to be honest. These are things that you should be learning about from an earlier age, whether that's from you in primary school or you're in high school. But typically, most of us don't become exposed to these concepts until we become an adult. And it was the same for me, because I didn't learn about investing or personal finance or creating wealth or money management skills or none of that. I didn't learn any of that until I became an adult and I was put in a situation where I needed to improve my financial situation. Otherwise, life wouldn't get better. I'd continue to live paycheck to paycheck, right? And that is what led me to start to learn about investing, to start to learn about personal finances, and to start to try to create wealth in some shape or form, so that the generational wealth that I wasn't able to benefit from the persons that came before me, my parents, my grandparents, my great-great-grandparents, right? I needed to be the person to kind of create that wealth and to put myself in a better position where I have investments, I have assets, and I have something to pass on to my child, right? And the thing about investing is it has a very steep learning curve. And what that means is that when you're coming from a point where you know absolutely nothing about investing, you know absolutely nothing about personal finances, you know absolutely nothing about money, everything can seem confusing. It might not make much sense. It might even seem illogical at sometimes, because some concepts you're just not familiar with, right? And one of the biggest things that I personally struggled with is getting past the barrier of instant or short-term gratification, right? This can be a major barrier to somebody that is learning about investing and wealth creation, right? And let me explain why. So most of us are used to instant gratification or short-term gratification, right? That is why a lot of us like to scroll and say TikTok or YouTube shorts or stuff like that, right? We like getting to the point. We like getting to the benefit. We like immediately reaping that reward. You don't want to have to wait 5-10 hours to see the conclusion of something that you can see the conclusion of in less than a minute, right? And that is why a lot of us love short form content. And the problem with this is when you become addicted to this short term instant gratification, it becomes difficult to see the bigger picture and the longer term benefit of investing, right? And of the things that you need to do in order to improve your personal financial situation and put yourself in a better position where your money is concerned. And like I said, this is an extremely big problem, because investing typically works better over the long term, right? Because of how compound interest and how compound growth works over the long term. As you consistently invest over a period of time, because of compound interest, because of compound growth, you tend to see your investments, your monies, your assets grow over time. But because we're so obsessed and used to instant gratification and the short-term benefit of things, we are not patient enough to kind of sit through our investments growing and compounding, right? And one of the biggest things I hear newer investors say when they come to me is, what's the sense in investing in a stock, and I invest my $10,000 and when they declare a dividend, it's a 1% dividend. So now I only get back $100. That don't make no sense, right? And that right there is the problem. You're not really looking at the bigger picture, because yes, you have $10,000 right now, and yes, if the return on that investment just from the dividend, for example, is say 1%, you know that 1% of 10,000 is $100, right? That's not a crazy amount of money. We're talking Jamaican dollars, that is. That's not a crazy amount of money. And yes, that is true. But you have to look at the bigger picture. When you grow your investment over time, when you build up your position, let's say you move from 10,000 to 100,000, right? Now that same 1% is $1,000. Let's say you get to 1,000,000, right? No, that same 1% is $10,000. Let's say you get to 10 million. No, that same 1% is $100,000, right? And I just want to use a simple basic figure just to give you an example, right? Because chances are if you're getting a return on your investment from dividends, you're probably going to be getting more than that. And not to even mention cap gains, which can be double, even triple digits in terms of percentage return, right? It is possible. It's something that can happen. But what I'm trying to explain is that you have to look at this over the long term, right? Another thing you have to do is you have to compare it as well to alternatives. And when I realized that that made a big difference in terms of my experience with investing and understand investing, you have to compare the alternatives. Think about it this way. If you had $100,000 just sitting around in a bank account where you're getting less than 1% in interest, chances are you wouldn't even make that $100, right? You wouldn't even get $100 back that you'd probably get back in dividends if you had it invested in a stock. And of course, investing doesn't just go one way, right? Things don't just go up and up and up and up. There are times when your investment may go down where you might lose money in the short term, right? And that is why investing just works better in the long term, because over time, chances are the stock price will fluctuate. But if you're investing in a solid business that is growing its revenues, that is growing its net profits, that is building out its business over time, those will be just short-term downturns in the stock price, right? Over time, chances are the stock price will recover. And if you look at whether the Jamaican market or the US market or whichever market you look at, if you look at what the stock prices were for some of these stocks like years and years and years ago, chances are they're significantly higher now than what they were in the past, right? So people need to get over that instant short-term gratification and needing that. Persons also need to realize that you have to compare the alternatives, right? A lot of people will say, for example, what's the sense of me investing this $100,000? I get back a 1% return. Yeah, it's $1,000, but that's basically nothing, right? Why am I not just go start a business, or why am I not just go do this with the money or that with the money, right? And you can do those things, right? Because entrepreneurship is a form of investing, but persons don't realize that when you invest in the stock market, that is probably as close as you're going to get to passive income as possible, right? Because you're investing in a stock, you're investing in a company where you don't necessarily have to do anything after that. Once you take the position, you just continuously build up your portfolio over time. You contribute to your position. When you get your dividends, you reinvest your dividends, or you do whatever you want with your dividends. And you just make sure that you keep abreast of the company news, what's going on with the business. You keep abreast of anything related to the company that may impact your investment. That's all you have to do. When you start a business or when you go on other ventures or other investments with your money, it often takes a more hands-on approach where you have to be involved. It's not easy in running an entrepreneurial venture, right? It's not easy to manage a business because a lot of skill and expertise is necessary to do that. And I'm not saying that you should not be entrepreneurial and you should not start a business. That is also an investment. That is also something you can invest in. You just need to know what you're getting yourself into, because oftentimes the people that bring these types of things to me are the same persons that won't have the time, won't have the skills or expertise, won't have the knowledge, won't have the willingness to actually invest time within that business, right? So in my experience with investing, there's a steep learning curve. It's going to take time for you to learn and understand these concepts, especially coming from a position of not knowing anything, but you can do it, right? Once you get past needing to be instantly rewarded for what you're doing, once you get past looking at just the short term, once you actually start comparing the alternatives, you start weighing up your options, it will make it a significantly easier experience in terms of you learning about investing, learning about personal finances, and actually being able to start to build your portfolio and being able to start creating wealth. But again, if you like the video, definitely leave a like. Remember to subscribe to the channel if you're not already subscribed. And as always, thank you for the support.